Welcome to the ROI Blueprint Mexico edition, brought to you by Kodak Capital. In today's episode, we're going to be talking about innovative approaches to real estate development and investment, exploring sustainable development, affordable housing, and leveraging private lending in real estate. Welcome, Kacee. To start, would you please share a little bit about your journey into real estate development and what inspired you to establish the 360 company?
Sure. Great to be here. I got into real estate starting about in 2012. I'd always wanted to be in real estate. My dad was a real estate developer and did very well financially, but he died when I was young, and so I'd always, I just always thought that you have to have a lot of money to be a real estate investor, and so I really didn't pursue it for most of my life. And then in 2012. I had some equity in my house, and I did a little real estate deal. I had seen all the house flipping shows, and back in those days, you could buy a condo in East Austin for $18,000, and I that was my first deal that I did, and it was I wish I had bought a bunch of those and kept them, but and I started doing a few flips, and I buy some condos, and I would put a little bit of money into them and fix them up and sell them, and I was just kind of doing it to make money. And I had another business. I was in the consulting business, and I didn't enjoy my company. I was kind of stuck in it. It was like good enough, but I wasn't getting rich doing what I was doing, and so I had to, making a pretty good living, and I was doing these little condo and small house flips on the side. And then one day I kind of came across a pretty big deal, and it had a lot of the elements of things that I was trying to do. That property had IRS liens on it. The seller was pretty motivated, but he owed more than the house was worth. And it was like a seemingly undoable deal. But I started doing the math, and I said, man, if I could make this deal work, I could probably quit my job or sell my business and hand over all the consulting clients that I had and just kind of do this full time. That's what I did. And I ended up negotiating a deal with the IRS to get their lien off of the property. I negotiated a short sale with the bank, and I made about $60,000 on this property. And I said, hey, that's enough money. I can quit my other thing and just do this full time. And so I had kind of continued on that process of just, flipping houses, but I was doing it on a relatively small scale. And then I came across a mentor who said, listen, this is a business. You need to treat it like a business, and you need to treat marketing like a business, and go out and do lots of marketing so you have unlimited deal flow and really scale the things up. So that was really the beginning of my real estate career. I started with flipping houses. I'm doing completely different stuff now, but
So that was in 2012, you said.
yeah. Yeah.
And what was the deciding factor in 2012 that you decided to finally make the switch into doing this? Was there something that happened specific?
Yeah, well, I finally did a deal that was big enough. And then I was doing a handful of deals, and I had a mentor. Like I said, this mentor was just teaching me, scale this, treat it like a business. This is not a side thing. And I had heard people, and I'd gone to training classes where they said, hey, real estate is an interesting side gig, but you can't quit your day job. And this guy said, no, you can build an empire at this. You could be a billionaire if you wanted to, but you've got to turn this into a business. And so I think that was a big thing. And then the second is I had my college roommate had a lot of success financially, and he was saying, man, you really should scale this business. You really should scale it. I've got some money. I would love to invest in you and lend on deals. And I had to hear that 3 or 4 times over the period of a year, where he was finally like, look, I've got a bunch of cash. You can borrow it. Go build this business. And so that was really what propelled it kind of to the next step. But mentoring was a big part of that.
So before getting into real estate, did you do any kind of training, or what did you do to learn about real estate?
Yeah, so I have an economics degree from the University of Texas at Austin, and I learned some general business stuff, and I had some consulting businesses, so I had some general kind of understanding of fundamentals of business. The biggest thing by far was paying for a mentor. It was I think it was $7,000 at the time for my mentorship, and it seemed like a lot of money, and I thought it was crazy, but he was like, look, this is a drop in the bucket compared to the amount of money that you can make. And I'm sure there's a lot of mentors out there. I'm sure that there are a lot that say they don't know everything about real estate, but this guy was actually doing some real estate himself. And so he was not only teaching people, but he was actually doing it. And he had a really good network of other people. And so, you know, I started buying every course that there is. So different real estate courses, I would go through them. I would learn from them. I would do the training that my mentor had. The biggest thing I think also was just networking with the group that they had. And so there's different local real estate groups and their system of training, but I branched out and learned from lots of other folks. And there was a nationwide group of real estate investors that would go on a cruise every 8 months. And so I'd go listen to the things that they had to say. A lot of it was over my head, but I really focused on just kind of getting little tidbits of information. So I would go to a conference and I would go to 4 or 5 days of classes, and I would just say, if I can leave with one or two little good nuggets of good information, that's really all you need to do to go make a difference. And you go to these conferences and you learn tons of stuff, and you take all kind of notes, and at first you just go and you say, I'm going to implement all of this stuff, but it's really just too much. And so if you go leaving with one or two great pieces of nuggets of information and then leave with that and go implement those things, you can really have a huge effect. But one of the biggest things that I decided to do was I went through and said, I want to do every type of deal. So I was already doing house flips. And I was like, hey, I want to flip a commercial building, a retail space. I want to buy a small apartment complex. I bought a small apartment complex and fixed that up and got that performing. I did a storage facility. I did an RV park. So I just kind of like did a little bit of everything. And and to get the experience to determine what it is that I really wanted to focus on, and including, I had rental houses, but I also sold properties with owner financing. So I got a little bit of experience doing a little bit of everything. And that not only helped my education, but also determine what I enjoy doing and what kind of things make money.
So after experimenting with all different projects, which one was your favorite?
There's a little bit of everything. I'm sitting here looking out my window in downtown Austin. You've got houses and skyscrapers and commercial buildings and all kind of stuff. And what I read a newspaper article that said that Austin has a shortage of 50,000 affordable housing units. If I could figure out how to do that, I could make a lot of money. If I could solve the affordable housing crisis, I could make a lot of money. And so I spent about a year investigating different affordable housing things. And people talk about tiny homes. And I looked into that and I said, tiny home is interesting. It might be cool for a young couple. That might be cool for an older retired couple. But most families, your typical families that are looking to work and work in Austin, a tiny house isn't the solution. I looked at container homes, and really a container, it's just four walls and a roof, but you have to do all the finish out. And four walls and a roof, is not that expensive to frame out. And so container homes weren't really the solution. So I just looked at a lot of different things and to try to figure out what was affordable. It turned out in Austin that building your own house, sometimes manufactured homes, modular homes, and in some cases mobile homes, are really the affordable solution. In my case, what I found is that you have to get out of town a little bit. You've got to go 20 minutes away from town where it's more affordable. And I created a really great business just finding land, subdividing it, and selling stuff with owner financing.
Your work emphasizes building affordable housing, especially in rural areas. What motivated this focus, and how does it influence your development strategy?
I grew up and seeing a lot of families struggling with finding housing and finding affordability. And I really wanted to have an impact. There's plenty of people that can afford $1 million houses in Austin, but there's a whole lot of people that can't afford any kind of housing. And so I really wanted to come up with a solution to turn renters into homeowners and really help people achieve the American dream. And the American dream is really out of touch in a lot of American cities. And so I think the easiest solution I found was people could go out 20 miles and drive a little bit further distance, and they could still be close to an HEB, that's our grocery store here in Texas. And they were willing to drive a little bit further out to be able to have a little bit of land and be able to spread out and live that dream. And so I think going out a little bit further out into rural areas is the solution for a lot of folks. So my goal really at the end of the day is just to turn renters into homeowners, and that kind of rural solution it fit the bill.
So, in your experience, what are the unique challenges of developing affordable housing with how have you addressed them?
There is a big area, a percentage of our population that's completely underserved by the systems that are out there, the banking systems, the financial systems that are out there. There's a good number of people that don't really participate in the credit system, that don't even participate in the banking system in the U.S. And so offering financing to people is a unique solution that not many people are doing, but it's also a place that there's a huge need for. There's also, challenges going out in the rural areas is there's a lack of local infrastructure, sewer, utilities, and roads. And so there requires some development to do that. And so, what we came up with is a solution by creating those properties, creating properties that had low requirements, low deed restrictions. So you could go build your own house. You could go build your house as obtain materials to do that. Something that you couldn't do in a traditional neighborhood. We allowed modular and manufactured houses. And what I found was that there's a lot of skilled labor out there, people that can build their own home. A lot of the blue collar workers that work in town that can't afford to live in town, they have the skill sets to build their own home. They just need some time to do it. They might be able to have to build it over a period of a year. But we will allow the deed restrictions to allow people to do that. And so that combined with financing is really the solution that we found for a lot of folks. And it turned out to be really profitable for us as well.
What areas of the country do you like right now, and what type of development do you mostly like to do?
So I'm in Central Texas, so I naturally like Texas. Texas is obviously a great market because there's tons of jobs here. People are moving from California and other states. We have a net increase in people wanting to be in Texas. Texas has low taxes. We have high property taxes, but no income taxes. We're very business friendly. Our governor is really focused in Texas on kind of cutting the red tape and making it easier. And so that's why people, like a lot of companies, are leaving California and coming to Texas because we're just very business friendly. Elon Musk has put Starlink and the Boring Company out in Bastrop, just west of Austin. He's got the SpaceX is down in Boca Chica, down in South Texas. So you've got this great business friendly environment. I love Central Texas. There are some secondary markets like Bastrop, Texas, that's growing 40%, one of the fastest growing areas in Central Texas. My biggest development is in Bastrop, Texas right now. I like the smaller rural towns that are close to jobs, but in general, other areas that I've looked at, South Carolina has really a lot of tons of activity. Arizona's got a lot of activity. And then I started looking at areas outside of the U.S. El Salvador, there's some Central American countries that have a lot of really amazing activity. Places like Tulum, people are going. It's a direct flight from Austin, Texas. It's a direct flight from a ton of different places. And so Tulum is how I found you guys. It's an amazing market, lots of growth there. It's a relatively safe place. And so Tulum is great. I also like El Salvador. I went down there. El Salvador is having this massive transformation. El Salvador went from one of the most dangerous places in the world to one of the safest, like almost overnight with President Bukele. And interestingly enough, I went down and met with President Bukele and talked to him about this. So I think anywhere where there's jobs is a solid bet. But you have places like Tulum where people can have a really high quality of living and still work remotely.
You're the author of Private Lender Secrets Revealed. Could you share some key strategies from your book on leveraging private or hard money as compared to banks or building wealth in real estate?
Yeah, I mean, one of the first things is that private lending offers speed and flexibility that banks can't. I've done over 400 real estate deals, and I can tell you if I had to use a bank, it would be less than 10% of that. When you're looking for deals, especially when you're looking at foreclosure deals, you need stuff that you need the ability to close quickly, right? And banks can't do that. Banks want 30 to 45 days. You've got to have a typical contract. They want to do inspections on the property. It's slow and time consuming. They do credit checks. They do all of these other things. And so you're starting out and you don't have all of the requirements that a bank needs, and the banking requirements are crazy. I have a fantastic income. I've got fantastic credit, and it was a real challenge for me as a self-employed person just to get my standard home loan, right? And so, private lenders, and there's a lot of them out there, have the ability to just move quickly. You can say, "Hey, look, this is a $250,000 house. I can buy it for $125,000. You want to do the deal?" They might ask for more if you don't have a lot of experience, but I've got lenders who can make that decision in 5 seconds. They go, "Look, it's a good deal. I can't lose money. Yeah, sure, I'll lend the money to you." Hard money lenders is typically what a private money lender is. Typically called a hard money lender. It's called hard money. A lot of times they are higher interest rates, but they can close fast, right? You can use them to go increase the value to the property, fix the property up, and then you can use that and then go refinance. One of the biggest things with hard money lenders is they can close quickly and banks can't. And being able to move nimble in real estate, especially when you're looking for good deals. Good deals don't want to sit around and wait several months for you to close. And so you need to work, working with private lenders that can move quickly is really important. And you find private lenders at your local networking groups, real estate groups, and that kind of thing. But, really you want to be the bank, a partner with one. And you can also buy property subject to the existing financing. Most people don't realize there's a deed that says who owns the property, and then there's a deed of trust that says who the bank is. And so I can buy a property but keep the financing in the seller's name. It's effective. I've done it over 100 times. It's really easy to do when you're doing it with older or when you're doing it in shorter terms. So you say, "Hey, I'm going to buy the property with financing, but if we're just going to do it short term for a few years, not maybe the 30 years, but 1 or 2 years." But deals that wouldn't work with banks really become possible with private funds, and that's a lot of what my expert talks about.
What common misconceptions do investors have about private lending, and how can they navigate these challenges?
Yeah, so a lot of people think, well, private lending is just expensive, and it is, right? When interest rates were at 4% with traditional banks, private lenders were at 12%. And now that interest rates are at 8% with banks, they might be 15 or 16% with private lenders. But you're not using typically private lenders for long-term stuff. I mean, the speed outweighs the opportunity cost. And so, sure, it can be expensive, but it really forces you to do good deals. A $200,000 house that you can buy for $170,000 is really not that good of a deal. That might work with bank financing, but you've got to go find the $200,000 house that you can get for $130,000. That's a good deal, and you can afford to pay more money when you're doing good deals. So it really keeps you in good deals. The misconception that it can be risky, private loans are often backed by hard assets. So for lenders, it does make it safer. But the solution is also to have multiple exit strategies. I've purchased a multi-million-dollar house that I decided to make it a really high-end vacation rental. I've actually done a bunch of those, but every time I had a second exit strategy, like, hey, if the $2 million lakefront house doesn't do well as a vacation rental, can I turn it into a flip? And so having multiple exit strategies is important in doing that. But the biggest thing is that you educate them and so that they understand how to do due diligence so that you can do a win-win deal. So that you understand the pitfalls, what the exit strategies are, what happens if the economy turns or whatever. So everybody understands what the plan is. And it's kind of an education for both the investor and the lender.
How do you assess and mitigate risks when undertaking new development projects, particularly in fluctuating markets?
A big part of that is kind of a little bit what I've already kind of said was having multiple exit strategies that mitigates risk quite a bit. You got to underwrite your deals. It's really easy. I say it's I hate the Excel spreadsheets. I mean, you've got to use them, but I hate it because somebody doesn't like the numbers. The returns aren't very good. So you just go change a number real quick. You say, well, it's $100,000 house and I'm going to buy it for $70,000 and it only needs it needs $20,000 in repairs and the numbers don't really work. So you go, well, let me just make that $20,000 in repairs only $10,000 and all of a sudden the numbers work, right? And so the biggest thing is not lying to yourself and just moving numbers around on a spreadsheet to try to make something work that doesn't work. So you've got to be really conservative. You've got to build contingency into every budget. So I'm the worst at underbidding stuff or underestimating what stuff's the work that's going to go into something. So I've always built a contingency into the budget. I like recession proof products. Those multi-million dollar houses that I was talking about, I did that for a while, but I really don't like that because when the economy tanks, that's the first thing people are going to stop buying. And so I really like affordable workhouse housing, no matter what that's going to be working. So you've got expensive houses, your average houses, then you've got your really low end houses, and you've got apartments, and somewhere down there you've got mobile homes. And if they can't afford that, it's like the next stop is homelessness, right? Or moving in with family and friends, but then homelessness. And so I want to be down there on the most affordable of options, so that no matter where we are in the economy, that's where I'm at. Now, that being said, there's a time and place for all product, but I personally like the stuff that's at the affordable house side of marketing. If you're in a resort area, there's luxury waterfront stuff. I want to be on the affordable side of that, and something that a little bit of everybody can afford. But the biggest thing is, you've got to be able to stay flexible. You mitigate risk by being flexible and being able to switch up what it is that you're doing.
And then our last question is, what advice would you give new investors looking to enter the real estate development sector, especially those interested in it?
I think it's important that you have a goal in mind, right? One of the great things about real estate is that you can build wealth with it. Real estate constantly goes up in value. It has for thousands of years. It's always going up in value. And so you can build wealth with it, but you have to have kind of a clear mission. One of the mistakes I've made in over 400 real estate deals is I went out there and would just say, I'll do any real estate deal. If it's a good deal, I'll buy it. And I would look back on my career and I thought, man, if I really just focused on a few things, I really would be much better off than on that. I've done very well. Had I, for example, not flipped houses and instead just given up half of all of the equity on every deal that I ever did, if I just gave half to a rich guy and just kept those 400 houses, I would have, gosh, 400 times the average house in Austin is $600,000, $240 million worth of real estate. Instead, I took the quick buck and made, maybe $20,000 or $30,000 per deal. And I did very well. But had I figured out a longer term solution, I think I would have been better off. I think it's important to constantly learn, right? And so that's books, mentoring real deals. I stopped doing that a few years ago, and man, it really had an impact because I saw COVID. I said, man, I'm just going to take a couple of years off and kind of sit on the sidelines. I didn't continue to network. I didn't read any books, and all of a sudden, the entire world has changed. And I kind of, as I become more active again in the real estate world, I've had to kind of learn and get about where we are with everything. And so I'm finding myself going back and taking training courses and learning again. Building a team is the most important part. You need a really good legal advice. In some cases, you need realtors on your team. You need money people on your team. And so building that team of people and having your resources, you can't do it all yourself. You can't finance it all yourself. I don't care how much money you have. You need a team of other people, including other really experienced real estate investors. The other thing that you need to do is stay persistent. I used to do a lot of marketing, for example, to the foreclosure list, and I would send 5 or 6 letters to everybody that was in foreclosure that month throughout Texas. And they would get a bunch of letters from. And in Texas, the foreclosure process was really short. And so you only got 3 weeks to hit somebody. I would talk to other people that were new to real estate and they would go, man, I sent out 100 letters and I didn't get any deals. That doesn't work. Well, it will work. You just have to be persistent about it. So persistence is really important. Profit and impact can go hand in hand. I always try to focus on solving people's problems. It's not, if you approach things as how much money can I make, you're going to be really limited. If you approach problems as how can I solve other people's problems? I've had people literally hand me the keys to their house because I solved their problem and I solved the problem for them. And so if you can solve a problem for sellers in a bind, you solve a problem for real estate development or community development, You solve an affordable housing problem. If you focus on solving problems for other people, everything else will kind of lay itself out for you. And that's really probably the biggest key to my success has been doing this for other people and solving people's problems. And then somewhere in the process, you make a bunch of money.
Yeah, that's great advice. Thank you so much. That was really great.
I'm always open to helping people that are in this business. I really believe by helping others around me and growing people around me that like it really elevates me. And so I elevate myself by elevating people around me. I want tons of successful people around me. So if there's ever anybody that is looking for mentoring, looking for help, I'm always available. I'll give you my website, my contact information. People are free to contact me at any time.
Perfect. Kacee, thank you so much for coming on the podcast today. We'll add your website on the screen so the viewers know where to find you.